housing market is on its last legs, with each passing year nudging more people out of the realm of home ownership. The UK and the US grapples with a crisis of housing affordability, spurring fears of an impending market collapse. A generation finds themselves priced out, struggling to stay afloat in an economic current that favours the wealthy and corporate landlords whose assets soar in value as demand perpetually exceeds supply. This conundrum begs the question: if home ownership eludes the majority, what fuels the ever-climbing housing costs? And who, ultimately, will purchase these homes? Interestingly, the UK has seen housing prices fall by 4.7% over the last year, the steepest decline since 2009, with the US showing signs of plateauing prices after years of escalation. Yet, home ownership remains a distant dream for many due to the stagnant wages and dwindling ownership rates. Is this a harbinger of a market crash, or merely a dip before the inevitable resurgence? Once milestones like obtaining a degree, buying a car, and owning a home were mere markers of success, today, the dream of home ownership has morphed into a fairy tale, unattainable for many in an era defined by overpopulation, inflation, inequality, and insufficient supply. Despite a slight decline in UK house prices, the average cost still remains dauntingly high at over £280,000. The Bank of England's repeated interest rate hikes have only exacerbated the situation, leading to prohibitive mortgages and a reticent buying market. Renowned investors like Warren Buffett anticipated turbulence, divesting billions in stock, while others turn to alternative investments like fine art for stability. The UK faces the spectre of a significant downturn as the post-pandemic recovery falters and inflation diminishes wages. The property market, previously buoyed by low interest rates, is now feeling the strain as fixed-rate mortgage deals expire, threatening to leave homeowners with untenably high monthly payments. The average American is already mired in debt, with credit card balances alone exceeding £10,000 per person. A decline in house prices could strip homeowners of the ability to downsize, exacerbating financial instability. This precarious balance illustrates the transformation of housing from a basic necessity to a speculative investment, a shift that began post-World War II and has since calcified into a system that obstructs new entrants to the market. The chronic housing shortage in the UK, with councils failing to build new homes despite lengthy waiting lists, aggravates the rental market. Prospective tenants in major cities face exorbitant rents and competitive housing searches, often requiring substantial upfront payments and invasive vetting processes. The renting population has doubled in 2 decades, trapping many in a cycle of paying off someone else's mortgage, enriching landlords at the expense of their own financial progress. In a future envisioned by the World Economic Forum, ownership is obsolete and contentment is found in renting and subscriptions, a prospect met with resistance by those who see through the guise of progress. The corporate stranglehold over ownership, from homes to cars to everyday appliances, threatens to reshape society into one of perpetual renting, where companies extract more wealth and exert greater control. As the world grapples with the housing crisis and its broader implications, the question lingers: what comes next? Will the market's brinkmanship lead to reform, or will the cycle repeat, leaving more disenfranchised and searching for alternatives to a system that seems increasingly rigged against them? Only time will tell if the current trends will provoke a paradigm shift or simply continue to strain the societal fabric. I hope you found this video informative. If you have, please remember to subscribe, as it does help the channel grow, and as always, I'll see you on the next one.